Hey everyone. A lot has changed since the last time I talked about my investments, and I kind of want to go over kind of my plan for the next year and sort of how I changed the way I invest. One thing that I kind of did is I simplified my investments because before I had way too much sort of money split between very different like platforms or different sort of areas that I invest in. And I mean, that was fine because I kind of see that the last couple of years of me just trying to experiment and sort of see what works, see what type of investor I am, and sort of what I like invest in. But right now I wanted to simplify everything because I think I was sort of too diversified in too many different areas, and it was very, for example, it was very difficult to track my portfolio. So my goal was to just make it as simple as possible, set automated payments, and basically sit back and do nothing. That's kind of my mantra for investing. But let's take a look at the first one. So I do have a pen here and an iPad, so I'm just going to be drawing some stuff. Let's start with the first one, which is VWCE. That is the index fund, or ETF actually, more precisely, that I'm investing in. It's an ETF that basically invests in the whole world, so you're kind of tracking the whole market. And if you watch any other sort of investment channels or read anything about investment, this is kind of a one and done strategy. It's very popular. A lot of people choose to do that, and I see why. It's very simple. You have one fund, one payment, one investment, and you just keep adding to it, and you seem to get sort of decent returns. And I'm not looking to sort of do better than the market or anything like that. And maybe you can get sort of a better investment if you just focus on, for example, S&P 500, which is just the top US companies. For me, I don't really see a point in trying to sort of beat the market. I think I would be just much happier investing in a whole world and knowing that I'm kind of diversified, and whatever happens, whichever country kind of wins in a stock market, or if USA still continues to perform, this index fund still tracks around like 60% of stocks are still USA based. So I think it's a good overall ETF. And right now, that portfolio, let me just check real quick. Portfolio right now of this index fund is around 42%. Yeah, so currently it's 42%. However, I kind of wanted to make it 50%, and I'm kind of almost there. But now that I'm getting close to that 50% goal of that my overall portfolio is basically 50% of just this one ETF, I actually want to make it a lot more. Right now, actually, my goal for the next year is to try and to get into like 70%. This would be ideal. And I think 70 is kind of enough. I don't want to sort of go overboard. I still want to have like 30% other invested in sort of other areas, but 70% I think is kind of a healthy one. When I started, I was like just like 10-20% of this ETF was covered by my portfolio, and I was kind of wanted to sort of grow that as much as possible. Right now, I'm almost at my goal, but I'm moving that goalpost a little bit further so that I can actually sort of sit at that around 70% spot. I think I would be very, very happy if this would sort of happen. So the next area that I'm investing there is a pension fund that I have with my bank. It's basically kind of very stock based, again, kind of covering the whole world, but the USA mostly. But it's kind of a very safe thing, and we do have some tax benefits here in Lithuania if you invest through these sort of pension funds. And right now, it's sitting at around, what is it? Yeah, it's sitting at around like 10% of my overall portfolio, which is fine. And I'm still adding money to it every single month, like via automated payments. But I think it's too little. I would love to get this to like 20%. I think that would be kind of ideal for me. 20% of pension fund and 70% of the previous ETF. And then I have left like 10%, which I can basically do like whatever I want, like crypto, you name it. However, I do have some other sort of very like big positions, relevant positions currently in my portfolio. However, I'm not gonna invest in them. So this third is stocks. I have a stock portfolio on Revolut, which currently is about 23% of my portfolio. So it is kind of a significant chunk of my portfolio. However, I haven't been adding sort of any money into it for the past year. If I kind of check it real quick, yeah, in 2023, last year, I only added about like $70, 67 euros. So it's basically enough. I've actually taken out some of it and sort of reinvested into sort of other areas. So the portfolio is actually decreased since sort of 2022. But I kind of don't want to sell any stocks. I still have some very good investments there. For example, let me just open this and kind of show you what I have here. If I open Revolut, I have some really good positions such as like Tesla, Apple, Coca-Cola, McDonald's, Microsoft, Netflix, Google, Spotify, Shopify, Coinbase, which I'm not proud of, and Unity Software. And besides just Coinbase and Unity Software, every other like investment here like outperformed everything. Like Tesla is like 142% up since I kind of invested in there. Apple is like 100% sort of gained over the last 5 years that I have been sort of investing in Revolut. So I'm really happy with this, and I don't want to sell these positions because I do believe in these companies, and I'm still actually, because I do have significant positions like in Coca-Cola, McDonald's, they're actually paying a lot of dividends which cover the cost for Revolut, because Revolut does have this oh sorry, let me let me get back to being in focus. Sort of Revolut does have a small cost every month, like a custody tax that you have to pay of the total amount of your portfolio, and just by having a couple of dividend stocks, this kind of pays for it automatically, and I even earn some money for it. However, as I mentioned, I'm not planning to touch this portfolio. Sort of what I have right now, I'm just gonna leave it, and that percentage, that 20% of the total portfolio, is just gonna slowly kind of decrease until it's not kind of relevant enough. And I don't know what percentage I want to get to it. Apparently, it will go in that 10% sort of area, which I'm fine with. First, I want to set the one ETF, pension fund, and then kind of the rest. But if we move on, the next thing that is kind of a significant in my portfolio is crypto. Oh, just let me just clean this up a bit. I don't know how to type. I need to learn. Crypto. Right now, it sits at only 12% of my portfolio. Again, I'm actually quite happy. Like 12% seems like a very reasonable amount of money just to have in crypto. But again, I'm not planning to either sell or buy any more crypto. Whatever sort of I have there, it's just gonna sit there, and I'm just gonna let it grow or crash. We don't know what's gonna happen. I'm still kind of bullish on crypto. So I think that 12%, if in some years it just kind of doubles, I'll be just happy with that. But I'm not planning to buy or sell any, just kind of keeping it as it is. And one more thing is life insurance. So I do have a life insurance kind of policy here in Lithuania, but I'm still kind of actually investing in it. I don't really like the way the funds are structured there and the fees and stuff like that. I did it like a couple of years ago, actually more, I think, than that, like 3 years ago. And I'm not super happy, but like pulling out is quite expensive. So I'm kind of keeping it as it is. Right now it's about like 9% of my portfolio. But I actually plan to also like make this just around like 5%, maybe even less of my total portfolio. Again, I would be very happy if this would happen. But this is basically it. As you can see, I'm kind of focusing only on these two. These are the two main ones that I'm actually actively investing, and I want to grow these. Everything else like stocks, crypto, are not being like touched. I'm not gonna like touch them at all. And then life insurance, I am actually contributing to it, but it's not a significant amount, so it's probably just gonna decrease over time. And this is the way I plan to kind of invest this year. One more thing, I actually want to showcase you the chart of how much money I personally actually added to my portfolio every single year. So as you can see from this chart, I started investing in 2019 and I only started with just 300 euros, and it's grown actually quite a bit. So like last year, I actually put my own like 7,300 euros of my own money into my portfolio throughout like different like ETFs, pension funds and whatnot. It's grown significantly, and I do plan for this year to also grow it at least the same amount as I invested last year, maybe even like pushing 8,000. I mean, the difference between 2022 and 2023 was like 1,000 euros. So I think it would be nice to just go around like 8,300 euros, another 1,000 plus, and just kind of keep investing more and more each year so that I can grow my portfolio at sort of an exponential rate. But that's kind of it. Let me know in the comments what kind of are you planning with your investments. What are you gonna do this year? I'm actually really curious to hear like sort of what people are thinking about, economy and sort of what is gonna happen. To be honest, for me, it doesn't really matter that much. I'm very much investing into strategies that are like buy and hold for the next 10 to 20 years. So whatever sort of market does this year doesn't really affect me. Last year was amazing for markets. We grew like a ton. This year, if we fall, I mean, I'm just buying at a discount. So for me, it's fine either way. But please do share your investment strategies in the comments below. Let's talk about it. Let's discuss. Challenge me, actually say that some other strategy is better than what I do, and who knows, maybe I'll reconsider. But that's it from me. Ciao.